Big investors are holding on to cash, but retail investors with higher risk appetites are playing the market swings. We're focusing on those opportunities today with Stock Smart's Marvin Germo. Marv, good morning.
Good morning. Thanks for having me back.
So good to have you back. You've been doing the status quo, diba? This is something that you're enjoying, even as the markets have been turbulent and a lot of people are suffering right now. There's still a silver lining in that there's still opportunities, whether or not it's the short term or long term. If you believe in the story of the rebound, tell us just, taking a step back, what has trading been like in the past 8 months, and especially during this lockdown? In the United States, there was a Bloomberg report saying that retail trading surged 200% because people are trading from home. It seems like a lot of smaller investors are participating. Has it actually been much better when it comes to retail trades?
I think there's also a spike here in the Philippines, but not in the same degree as what's happening in the US. Because for US markets, you saw a lot of people who got their stimulus checks also investing them in the markets in general. But since everyone is working from home, staying at home, you can't really go out. Other people are trying to find sources of revenue that they can also do at home, and it's consistent to what's been happening. People have been selling online e-commerce. Then you also have this possibility of people trading and investing. So because the barrier to entry is not as high, you can start investing for a very, very small amount. That's why you're seeing more and more people start to do it, and it's by the number of people who have been trading, you're seeing more newer investors start since the lockdown also last March.
Which stocks are being bought right now? What are these retail investors looking at? Are they, the quick money opportunities here, sentiment driven, or are they the big blue chips? Are people looking much more long term when it comes to these trades?
I think it's hard to pinpoint what the specific stocks are, because there are some investors that are really looking for the long term plays. There are some investors also who are buying it just as a proxy to get cash flow from dividends. And A-REIT also was a good example that there are people that you're not getting a lot from bonds right now, so better take in the volatility from A-REIT because you can get cash flow from that. Then you have people who are trying to trade the markets on a more regular basis. So I think it's a good mix also of people, but the difference that you're seeing also is there's quite an awareness right now that it's possible, it can be done. It wasn't like when I was starting more than a decade ago that people had the notion that you need to be a multimillionaire to invest in the market, that you need to be this sophisticated and know a lot of this jargons and accounting and economics to invest. That being said, also, I think there has to be a balance that it's not as hard to get into the markets, but people need to know what they're getting into. I think the biggest problem also when people start investing is when they listen to their friend, they listen to the crowd. There must be a point that when they start investing, they know it's money that they can afford to lose, that if it goes to zero, they're okay with it. It's money that in spite of the volatility, they will be okay. Because when people are starting, it's all about emotions. When they see their stocks drop and it's their first time to invest, they get rattled, they get to sell at a much lower pace. And then when they start losing money, they totally abandon the market in general. So it has to be a point where when people start investing, especially if they're new, that they have it at the back of their head that there will always be volatility. The markets cannot go up forever. And in the same way, like what we're seeing right now, the markets cannot also stay down forever. Recoveries do happen.
But Marv, I mean, in a normal scenario, and if all you teach Finlit as well, but parang, of course, we know that that savings are the extra money we can use for trading, diba? But not a lot of people will have savings right now. People are losing their jobs, and that's why they're actually looking at trading, in hopes of that giving them more income. Is that an okay thing to do, to actually bank on trading to replace the income that we've lost? Ang hirap naman, di ba?
This may not be a popular opinion, but if you think your cash flow is threatened and you don't have cash, you have debts that you need to pay for, it might not be prudent to invest in the market, especially if you're starting, because there's also a learning curve. Like in any job, profession, or business, investing and trading is also based on skills and experience. So if you're doing it for the first time, and then people always think that the stock market is like the lottery, that if I put my money here, magically I'll hit the jackpot and I'll get rich. It doesn't work that way. So my suggestion is if you think your cash flow is threatened and you think that you don't have enough savings, it may not be a good idea to invest in the markets. Although we want people to invest, but it's not. You have to take care of your personal financial position first, because I'll say this: it's easier to trade and to take and be more aggressive if you know that you have a buffer, you have cash. That if your money in the market doesn't perform the way you want it to go, kakain ka pa rin next month. You will still have money. Your kids will still have money to pay for you can pay for their tuition fee. But if you're using that money for it, we cannot predict how the markets will go. And people have been
Oo.
saying this, that I'm in debt, I'll invest in the market to pay for my credit card debt. Don't do that, because
Pwede.
there's one thing that I do know. You don't know how much you will earn 8 months from now. But the debt that you will pay from that credit card, for sure that will happen. So better pay off that debt first before you start investing.
Marv, in a practical perspective, I mean, what's the minimum requirement in terms of how much savings you have, even as a percentage of your equity, to be able to start trading? And I mean, how much minimum capital do you actually need to make this worth it?
I think that's relative also. It always has to come to a point where it's an amount of money that, should there be volatility, they won't be scared to cut, they won't be scared to sell. Or in the same way, if it drops also, and they're not a person who likes cutting losses, that they can live with holding on to it for a long period of time before it starts to recover. So I've seen people who have invested 1 million, more than 1 million, they see their stocks go down, they're okay with it. I've seen people who invested 50,000, and then you see volatility and then they're scared already. There has to be a sweet
Okay.
spot, what you could tolerate. But if there's one thing that I tell people, start small. Start with a very, very small amount, then gradually scale it up from there. So it doesn't matter, 10,000, 50,000, 100,000. Then you scale it up
Okay.
as you start getting more comfortable.
Marv, hindi ba lugi with the transaction fees if you just do a small amount, like 10,000?
Well, here's what
What
I
is there like a balance? Oh, and time, di ba? Go ahead.
here's what I tell people. The transaction fees there, totoo, percentage wise, it may not be as attractive, but in the grand scheme of things, it's not as big also. The transaction fees in the
Okay.
Philippines compared to other markets are relatively cheaper. That's one. Number two,
Okay,
I'd
cool.
rather pay more in transactions fees right now, but gain the skill. Because 2 years from now, 3 years from now, when I have more money, the skills that I've gained in the past
Mm.
3 years will be remarkably better, as compared to starting with a large amount pero wala pa yung skill doon. That's where money also gets lost. That people have to understand, there's a
Tama.
learning curve. There has to be experience. So better do your due diligence, do your dues, and create a framework where, okay, I already know what I'm getting into. Then I'll just add more. I'll scale it up. There has to be proof that it's actually working for you. Because if it's not, then maybe you can still be exposed in the market, but buy index funds, buy high dividend paying stocks, just
Okay.
buy the REITs.
Okay, that was my next question. What about, like you mentioned, you need savings. You need to be able to feel like you can lose this money if you do want to get into stocks. What about putting your money in bonds? Right now there's a lot of issuances of corporate bonds as well. Even the treasury has a lot of bills, premium bonds, A-REIT, as you mentioned, which have dividends. Is this an okay play to do? In terms of you can actually do that even if your savings are not that much.
Okay, there still has to be a specific cash amount that, if there's an emergency, they can pull that out. Anything on
Mm-hmm.
top of that, they can invest already, because bonds still are relatively liquid. So if they
Okay.
can project that their cash flow won't be hit, by all means they can do it. There might be lesser volatility, but just a heads up to a lot of people. When I first started investing in bonds, the retail treasury bond I got was around 7.25%.
Wala na.
You're not getting the same returns right now. So I think it's for people who just want something higher than the regular time deposit, that still don't want to touch it. But should there be an emergency, it's liquid enough that I can sell it, even though there's a risk that it might be lower. Should they sell it before the term?
Okay, let's talk about specific stocks here and what you're actually excited about. You already mentioned A-REIT. Can you give a comment on the performance of the A-REIT? It was down during the first trading day, even as it was oversubscribed naman. ahead of that. What does that say about the, the REIT market? But then SM Prime is also still looking at it, and what does it say on the attractiveness of these instruments for at least retail investors?
Well, based on what you said earlier, also, it's pretty evident that the sell down, it dropping, was pretty much because of foreign institutions going out there. So I think that's one of the prevailing theme, and it's not just for AREIT; it's for majority of the large cap companies in the Philippines. So if you are a long term investor and you are okay with the dividend yield, the lower the stock price is, the higher your dividend yield will be. I'm not saying that that's how it should go for every REIT that will come out. They have to study also what's in it. For a REIT, a lot of the companies that are renting for the properties of Ayala are locked into long-term leases. So I think it was around 5+ years the average lease. So a lot of them are connected to the BPO industry, which in my opinion is still one of the more resilient industries that we have right now. So it will really depend on if there are further issuances. They have to look at where are the buildings placed, who are the
Okay.
tenants, the quality of the tenants, how large the companies are, their ability that they can actually think that 1, 2, 3 years from now, those tenants will still be there. So similar to AREIT, I think that's the underlying advantage of AREIT, is because their tenants are connected to the BPO industry and they're locked for long-term leases. And if they leave, they have to get out of that lease. They have to pay also penalties attached to it. So it's still a win-win for
Okay.
Ayala should things go bad.
How can you compare A-REIT versus Ali? Which would you prefer?
Uh I think it's a different play. If you buy Ali because you want growth in their whole property development space. The thing about Ali though, since we are in this new normal,
Oo.
it will affect whatever growth that they have in terms of property developments, in terms of the areas that they mapped out. But for A-REIT, it gives investors a more stable return, because people need to know this. You don't buy a REIT for growth. You buy it for cash flow. So if you are into
Mm,
cash flow, you buy a REIT. If you're, in my opinion, a property is will be one of the most hit. In banks will also be
okay.
hit. Airlines will also be hit. You buy Ali knowing that when everything will reverse later on, when everything will recover, the stock will also get better. But you must be willing to wait. Since
Mm.
there's still no end in sight on how this will go. If you are positioning right now, it might be relatively longer waiting period for you until they recover. So that's how I would look at it. A REIT is for cash flow for today. Ayala Land is for under the prospect that when things get better, earnings will come back, and the stock price will follow.
Okay, Marv, before I let you go, you were saying offline, you've mentioned that pick the ones that will thrive in the new normal, diba? So the ones that are essential goods, pure gold, for instance, Tel, Globe, these types, but these are already the highest ones year to date.
Mhm.
How do we know? Is it still worth it to be entering? And how do you know that it's still going to be going up? Because people are quite scared to enter now. Na parang baka nawala na yung rally, diba?
Mhm. Well, it's true no that they're relatively at the higher portion already, but similar to PLDT from a technical standpoint, it wasn't a very very long downtrend, and just a couple of months ago, it started to reverse from that downtrend. So from a technical aspect, it's at a much better position now than where it was a couple of years ago. That's one. Number two, they could peg it in terms of the dividends that they're getting. I think for PLDT it's around 5+ based on the prices yesterday. For Globe it was around 4+ dividend yield. So if the dividend yield is acceptable for them at that current level, then they can go for it. But of course, if they know how to wait, if they can wait for pullbacks, they can wait for corrections for an acceptable yield, then go for it. So I'll quantify it, Danny. They can segment
Yeah.
their trade into two. Number one, they buy the ones that thrive, but they have to still be strategic on how they enter. At least that one, they know the earnings could be predictable this year, next year, and a year after that. Or they buy the ones that won't really do so well, but they have to wait a longer period of time until earnings would come back in those companies. So I think that's
Okay.
how they could segment their investments.
Do you have a target price for Tel?
Let me check my charts right now.
Go ahead. We have it open right now on the terminal also.
Okay,
Just for the breakout.
so for So for Telno, one of the things that's so interesting about it just broke out of the 1365 level just last August 19 to 20, that particular week. So if
Okay.
if the breakout continues, I'm seeing the next resistance around the one. There's I'm seeing the next resistance at around the 1551 level. So the move to
Okay.
1551 is predicated on if the 1366 would continue to be the neck would continue to solidify itself as a support. But that being said, while I'm saying this, the trend is
Mm-hmm.
up. The tide is towards PLDT pushing higher. So one thing that traders could watch out for is the 1369 level, if that would
Okay.
particularly hold, and if that holds for the short term, it could possibly move to the 1551 level.
Okay, so still some upside here for the best players year to date. And also be careful when you do your trades. According to Marvin Germo, don't just jump into the market. Test the waters first, start small, and then learn your expertise. Thank you so much for those insights. That was, of course, Marvin Germo of Stock Smarts. And that's a first look into the business day. Today's August 27, 2020. Catch us again tomorrow morning. I'm Dani Laurel, and we are One News.